Welcome back. You're tuned into CNBC TV 18. This is Budget Breakfast. Ahead of the budget, yesterday we got the economic survey as well, and the recovery is complete. That was the key message coming in from the 371-page economic survey, which was tabled in the parliament yesterday. The first economic survey since the start of the Russia-Ukraine war. It highlighted that prudent assumptions in the last year's budget actually provided a buffer to the government during global uncertainties. The survey highlighted that India has moved on from its encounter with the pandemic and projected a real GDP growth of 7% this fiscal. It's also forecast 6.5% real GDP growth and 11% nominal GDP growth in FY24. The survey said that the government was on track to achieve its fiscal deficit target of 6.4%. It stressed that the availability of fiscal space is paramount amidst global uncertainties. The survey has warned that entrenched inflation may prolong the monetary tightening cycle, keeping borrowing costs higher for longer. However, it's added two silver linings. One, lower oil prices, and second, a better current account deficit position that will make the external situation manageable.
The downside risk is higher than the upside to that baseline estimate. And when we talked of entrenched inflation and tightening cycle could prolong, that is something that we spoke in the global context. Domestic context, I don't see too many risks to growth. It is something that India has to do not on an either-or basis, but on an and basis. That is, the investment requirements for us to move from lower middle income to middle income category countries is to have investments coming both from the public and the private sector. Balance sheets are very important drivers, and so are current profitability trends, and both of them are pretty robust for the corporate sector to invest, and they have been investing. There is no reason to believe that the government is deviating from the fiscal consolidation path. Few years of steady nominal GDP growth will cause a meaningful reduction in the fiscal deficit parameters.
Well, Mangalam, we have given the market setup, how the global cues as well are looking at, but there are going to be plenty of stocks that are going to be in the news today. Sonal joins us early this morning to run us through that entire list. Morning, Sonal.
Good morning, guys. Of course, I don't know much cricket, but since you guys are talking about it, so let's start with Coal India. Hit it out of the park when it comes to earnings this time around. A top-down beat, and it is the earnings beat in terms of sales, which actually flew through their EBITDA as well. So EBITDA at 10,389 crore rupees, margins at 29.5% versus an expectation of 26%, and profit also came in at 7,719 crore rupees. Also watching out for Syngene and Biocon because it has been in works as well, and now sources are suggesting that Biocon will be selling 10% stake in Syngene today. Offer prices between 560 to 562.3 rupees per share. So that is a big stock to watch out for. Moving on, Cholamandalam, very strong set of numbers. We have disbursals which are up 68% on a YOY basis, up 20% on a sequential basis at around 17,600 crore rupees. Quarter on quarter, loan growth is the best in 26 quarters and on a YOY basis, the best in 18 quarters as well. Indian Hotels, again, strong set of numbers, best ever quarterly show for the company. If we look about the pricing power and operating leverage, that really worked for the company this time around. Compared to pre-COVID levels, revenues are up 23%. We have EBITDA 40% and profit after tax up around 90-odd%. Margins have come in this time around at 35.4% versus 29%. So good set coming in from Indian Hotels. Shriram Finance as well, decent set of numbers. We have disbursals which are up 3.4% on a 13.4% on a sequential basis. AUM is also up 13.2% on a YOY basis. And lastly, Adani Enterprises, the FPO, it has sailed through, was subscribed 1.12 times. So of course, that stock will be in focus as well.
All right, Sonal, thank you for enlisting all the stocks that we have to watch out for. And talking about the Adani Group itself, as we told you earlier, let's talk a little more about the 20,000 crore rupee follow-on public issue by the company, Adani Enterprises. It's been fully subscribed, with bids pouring in on the last day of the three-day issue. The QIB portion was oversubscribed and saw demand for over 1.6 crore shares against the nearly 1.3 crore on offer. The HNI portion of the issue too was oversubscribed at about 3 times. This led to the overall issue crossing the success threshold. CNBC TV 18 learns from sources that family offices of many large Indian conglomerates have participated in the Adani Enterprises follow-on public issue. CNBC TV 18 has reached out to a few family offices for confirmation on this buzz as well, and those responses are awaited.
Well, on that note, let's get you another crucial update then. CNBC TV 18 spoke to MSCI about the recent reports concerning Adani Group entities. MSCI responded to our channel saying that it is aware of the reports recently published regarding the Adani Group and associated securities, and that it is closely monitoring publicly available information regarding the situation and the factors that may impact the eligibility of those relevant securities for the MSCI Global Investable Market Indices. At the same time, MSCI stated that it's welcoming timely feedback from various market participants on these issues. They also said that any change to its indices will be announced to all its clients simultaneously, while adding it may communicate further as more information is available.
All right, so that's about the Adani Group FPO. But the big Q today will be